everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and we've got another story on Deutsche Bank as Deutsche Bank trader admits to rigging precious metals markets. As we've talked about so many times, it's nothing new. We've been talking about it for over a year now, since I think 2015 actually, and maybe before that in some conversation, but it's been all proven in a court of law. They were caught red-handed rigging the silver markets. They were caught red-handed rigging the gold markets in 2016 in a court of law. It also brought in a whole bunch of other banks like HSBC, BNP Paribas, Bank of America, Scotia Bank, and the list goes on. And I think it's really important to continue to update people on this, on the fraudulent activities of Deutsche Bank in rigging the markets and the derivative markets around the world. And before we go into that, I'm going to read a little bit out of this article quickly, as Zero Hedge reports. After months of smoking guns and conspiracy theory dismissals, a Singapore-based Deutsche Bank trader at the center of fraud allegations finally confirmed by admitting guilt what many have suspected. The biggest banks in the world have conspired to rig precious metals markets. The Deutsche Bank trader David Liew pleaded guilty in federal court in Chicago to conspiring to spoof gold, silver, platinum, and palladium futures, according to court papers. Bloomberg notes that spoofing involves traders placing orders that they never intend to fill in an attempt to manipulate the price. And it says in one of these statements, between in or around December 2009 and in or around February 2012, the relevant period, in the Northern District of Illinois, Eastern Division, and elsewhere, defendant David Liew did knowingly and intentionally conspire and agree with other precious metals, gold, silver, platinum, and palladium traders to A. knowingly execute and attempt to execute a scheme and artifice to defraud and for obtaining money and property by means of materially false and fraudulent pretenses, representations, and promises, and in furtherance of the scheme and artifice to defraud, knowingly transmit and cause to be transmitted in interstate and foreign commerce by means of wire communications certain signs, signals, and sounds in violation of Title 18 United States Code Section 1343, which scheme affected a financial institution, and B. knowingly engage in trading practice and conduct on and subject to the rules of the Chicago Mercantile Exchange, CME, that was of the character of and was commonly known to the trade as spoofing, that is, bidding or offering with the intent to cancel the bid or offer before execution by causing to be transmitted to the CME precious metals futures contract orders that Liew and his conspirators intended to cancel before execution, and not as part of any legitimate good faith attempt to execute any part of the orders, in violation of Title 7 United States Code Section C6, blah 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 blah, more bureaucratic mumbo jumbo. So the point of us kind of going into this is to basically show the evidence that we've been talking about for so long about Deutsche Bank and all these other banks that are manipulating gold and silver prices around the world. We are in a bull market today, but it's an artificial bear market, and this is really something that's extensively destructive long term, but really long term when all the banks' chains are cut, when the economy crashes under the fiat currency system that we're currently in, this will all be bounced back up and the price of gold and silver will skyrocket. But with that said, what we're seeing today is absolutely fraudulent. And also on top of that, we got the ETFs and everything, the paper contracts, and we're watching the price of gold and silver constantly kind of go down when it should be going up. And even though physical metal buy-ups are going up at I think a rate of about 9%. So John, can you go into what insanity we are facing with this Deutsche Bank scheme and all these other banks around the world?
Yeah, well, it's been well known that they've been manipulating this for a very long time. There's been documentaries out there talking about this extensively, going very into deep from whistleblowers within the CME and other places. Of course, Josh touched upon the ETFs and other derivatives of gold and silver, which is used to manipulate the price down, which makes it look like it's a false sense of how much gold and silver there is in existence. When you actually look at, for example, the ETF GLD, there's anywhere between 300 to 500 contracts for every physical metal, and that is insane. Just thinking about that, just the mass amount of paper leverage that's out there in the economy. And we talked with Stephen Kendal back, where he, his predictions of gold and silver
Yeah,
going
he's
up
a derivatives expert.
Yeah, is based on looking at how much actually physical metal there is and how much it would be if the market cap of whatever is in there now goes actually back to being forced to just trade on the physical in existence. And it's massively higher the prices would be because they've been so crazy manipulated up with this crazy amount of leverage and derivatives that these banks constantly create in order to make more and more money on just trading it in between each other. Because if you were to go with a regular trade in gold and silver, it wouldn't be that much fun to do, because the gold and silver, you just keep it in you and store it around. You don't trade it. You're not supposed to really trade it. You're supposed to have it as a wealth insurance.
It's insurance of wealth. Yeah, and I mean, a lot of us will look at this and say, okay, well, the price is lower, so let's go in and buy. And that's true. And it is a fantastic opportunity from that extent. But the fact is, most people are scared away from it for this reason, because they see the price kind of not really bouncing much. They look at it as an
investment. That's the problem.
Same as people saw for so many decades leading up to when it jumped from 2002 to 2012 about 10 times. Mm-hmm. But I think it's really important to mention that when the economy crashes, this will be an insurance of wealth, and the economy will crash. It's inevitable. Fundamentals are off the table, as we often say, so we can't put a date on it, because basically it's all up to the amount of market manipulation that's at hand. We can't put a date on it. It's impossible, and it would discredit us if we did. But one thing that is important is why they're doing this, and they're doing this not only to make a profit themselves, but to also keep people away from insuring their wealth, because they have created this debt pyramid, this incredibly heavy, destructive debt-based derivative system that will crush us underneath. And they don't want people going out and insuring their wealth, because they want as many people in servitude to them as possible. Because when you shove that person down that bottomless pit of debt, as I often talk about here at WHAM, almost in every video, is that once they're down that hole of debt, they're forced to only ask for a ladder up from the government and the banking system. And that is servitude, folks. That is enslavement. That is enslavement via debt. And I think it's so important to go into this. And obviously, people might be asking, how is the economy inevitably going to crash? Well, it's a manipulated fiat system, so it's centrally planned into oblivion, devalues at its very creation, and then creates debt and inflation, and that continuously, it's a paradigm. It perpetuates forever and ever. It's a Hegelian dialectic, and it's all based on debt, and it just will, no matter what, explode, because it always has, always will. And we're almost on the 1000th anniversary of fiat currency from 1024 AD in China. John?
Well, this whole scheme is going to continue to manipulate until that one point when somebody wants the physical thing and they're asking for it and there's nothing there to back it up. That's when it's going to happen. That's when the whole thing is going to come collapsing down on everybody. And of course, with the ETFs, not just only the ETFs are leveraged, but then they go into margin debt on top of that. So it's like it's so high over leveraged, the amount of contracts, but then you also buy debt, which is another leverage to buy the leveraged contract. So again, it all comes down to when people want that physical thing, no matter what it is, the fake supply that are being created by all these paper derivatives around the world, when that one person or one country or whatever it is want that physical commodity, that whole system will collapse, and suddenly it will just spread worldwide and collapse everywhere, because people will suddenly realize that this whole thing was a scam, and there's nothing left other than fake paper, and whoever we're lucky to hold those commodities will win.
Yeah, absolutely. And those that don't will be dependent. Really, they will be in great poverty. They'll see starvation for themselves, as we've seen historically in so many different societies, and it'll be terrible.
Well, and commodities are everything that you eat as well. So don't just think when I say commodities that it's just gold, silver, and oil and so on.
Wheat
it's
is everything. Wheat is the world's earliest money, as J. Edward Griffin
in the Roman Empire, they actually used the reserves, the wheat reserves, to create the breads and circuses with the Colosseums and so on.
Yeah,
Julius Caesar
absolutely.
created.
There's an interesting documentary just on how cereal, breakfast cereal, has changed the world, and I suggest you look it up because it's one of the oldest commodities is actual cereal, which might make people go, Just look it up. It's very interesting. But it's so important to tell people how they can insure themselves at their wealth, and I think that it's important to diversify personally between sound money, gold, silver, and then the decentralized blockchain, cryptocurrencies, real free market stuff based on actual individual demand.
True diversification.
Absolutely. And that's for my opinion. I'm not an advisor. I have to legally say that because these days you have to go to some Keynesian indoctrination camp in order to legally be able to talk about this.
The securities will come.
Absolutely. Thanks for going into this, John, and we will continue to update you on this story as it goes on because it's so important that people understand how to take care of themselves and be self-sustainable and self-responsible. Liberty, the most important part of individual liberty, is self-responsibility, and you can't have one without the other.
Banksters are banksters.
Absolutely.
Like, the reason why I said that is because these bank people have been around for thousands of years, and they constantly find ways to manipulate things in the monetary system when you have this paper type of system. So they're banksters, absolutely. No matter what. They always were. They always will. They always had this psyche, and the way the monetary system is created on this paper fraud.
Absolutely, and it's going to continue to go on and on and on if we don't understand the real problems, call it by name, and shoo the snakes out of the den. So thanks, John, for going into this with us, and we'll be back at you with much more. Check the links below, GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube. Also, check our Bitcoin address in the description and the comments, as well as on the screen for you to scan, if you please. And also, check our link to the Red Pill Expo, which takes place June 23rd to 24th in Bozeman, Montana, where you could see people like Robert Kiyosaki, G. Edward Griffin, Richard Gage, Lord Monckton, Jeff Berwick, James Corbett, Mike Adams, Ty Bollinger, Joel Salatin, John Rappaport, Cynthia McKinney. The list goes on and on and on, folks. I really hope you
there. Time is running out.
Absolutely. I hope to see you there. But until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change.